Back on Morning Movers, we're watching Taiwan Semi. The company released quarterly and monthly revenue numbers overnight. Saw a big jump. Quarterly revenues up 41% year over year. March revenue up more than 45% in the last 12 months. Now, the stock is up 9% this year, but has fallen nearly 30% from its January all-time high. Time now for Options Corner. Joining us to take a deeper look at Taiwan Semi, we've got Rick Ducat, Duke of Data himself, lead market technician. All right, Rick, talk to us about the trends you're paying attention to when it comes to the chart for Taiwan Semi.
Yeah, so this one has held up a bit better than the broader tech sector as well as the S&P 500 here. If you look at our first chart, you can see our year-long comparison of this very important company in this very important sector. So up about 8.5% during the past 52 weeks, while the broader tech sector is down about 0.5% or so. But if we were to move to our next chart, we can see it's, to say, I don't even know what to say about the last few days. It's been interesting to say the least here for stocks. But when we look at this one, we can see that our uptrend was broken. We progressed to a falling wedge type shape. We had a severe breakout to the downside below that red line near 156. But we did stabilize at that previous low point that we had from August 5th, that key low for so very many stocks across the board here, near about 133.50. Now we have made our way back above that old supportive level. We are back within the boundaries of our pattern, but we still have a key area to overtake. That pink line, 171, matches up with our long-term purple 252-day exponential moving average there. That would also mark a breakout to the upside from our pattern here. So RSI not really making a breakout yet as well here. And just a kind of a reminder that, bear markets in general, you can see ferocious rallies. Overall, the trend is still down. We haven't really progressed into an upward trend yet here. So just kind of don't do anything rash, I guess is what I would say.
Okay. All right, Rick Ducat with a look at the chart for Taiwan Semi. Thanks, Rick. Now to take us through an example trade, we've got Tom White, senior options contributor. All right, Tom, so how would you go about an example trade after this latest revenue update from Taiwan Semi, especially given that they've got earnings coming up?
Yeah, Diane, they have earnings on the 17th, so about a week away. And I think that's what you have to take into context. This company gives monthly updates on revenue, so you get a little bit more clarity on what they're doing on a quarter-by-quarter basis by reporting those numbers. You mentioned over 40% gains in revenue for this particular quarter. So that's probably something you have to look at. You have to look at the earnings. Implied volatility levels really elevated in the near term. So I looked at a strategy that takes advantage of that. If you're bullish on this name after, with the stock opening up about $156 today, shares are down over 30% from those all-time highs, even with that 12% pop we saw yesterday on the rally in the overall market. So I looked at a strategy. It takes advantage of high implied volatility if you have that bullish stance on it. So I looked at a call diagonal, but I gave myself a little bit of duration also. Went out to the May monthly cycle, so 36 days to expiration. And I'm going to buy the 155 strike call. That's basically at the money. It's got the higher delta. It reacts more to the stock moves. And then in the near term, April 17th monthly options that expire in just 6 days or 7 days, we're going to sell the 170 strike call. So a bullish $15 wide call diagonal, where you're going to pay about an $8.50 debit if the stock opens up here about 156. So you're paying a lot less than the width of the call diagonal. And why is that? Well, because you're buying a really low implied volatility at about 56% on aggregate in the May options on that 155 strike call you buy, and selling about an 83% in the near term April 17th monthly options that you're selling the 170 strike calls. If you pay that debit at $8.50, that's your risk, $850 per spread. Now, what's your break even on this one to the upside? Probably anything above the 160 level is going to be profitability on this. That break even of about 160, that's only about 2.5% above the current share price of Taiwan Semi, which is about $156. The nice thing is you got that vol dispersion, which lowers the entry point of this bullish trade. But then as you get closer to expiration over the next 7 days, you'll have that ability to roll or adjust that short 170 strike call, hopefully creating credits, which lowers your risk, increases potential profitability, lowers that break even. So you've got some adjustments or trade management that you can do that can actually increase your profitability. The key thing here is You only do this type of trade if you think the stock's going up post earnings. Remember that. I think that's one of the key takeaways from this. But taking advantage of high near-term implied volatility due to that earnings event and buying something at a lower implied volatility level contracts the risk and entry point on this bullish trade.
Okay, paying attention to risk on this bullish trade is called diagonal example trade on Taiwan Semi. Thank you, Tom.